Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday, March 29th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we've got Dunkin' Brands, we've got Morgan Stanley, we've got VRTX, we've got, what else is on our radar this morning? A couple other earnings. Sonic came in last night. We had Depot coming in last night, so some earnings to discuss, some drug news, and some upgrades and downgrades, and Apple will be on our radar this morning as well. We're going to have, as far as guests today, Tim Melvin will be on this show. He is the author of Banking on Profit and the Banking on Profit newsletter on MarketFi. He's really one of the best when it comes to small bank stocks. If you like your financials, if you like your financials big but not too big, he's really your guy for that. So looking forward to chatting with Tim this morning. Joel, how are we doing in the S&Ps?
Unchanged here at 2151.50 pre-market high. Came up a little shy of yesterday's high, which is 60.50. Keeping an eye on the upside for that level. Also, halfway on the bounce here is 23.57 and 75, another number to look at today. We have crude trading up 28 cents at 48.63. It looks like we have a little bit of a breakout here to the upside, clearing the low 48s, but we'll see if we can clear that and get into the 49s. And then, of course, $50 will be a psychological level if crude can get back up to there. Gold and silver trading in the red, not by much. Gold down $3 at 52.60, and silver down 9 cents at 18.16. Keep an eye in the gold market here. Yesterday's low, real close to today's low, so we're either going to have a double bottom here or maybe see the lower 1240s. Dennis, how you doing on this Wednesday morning?
Just chilling here, looking at a little pullback after the big rally there yesterday, Joel. 2-day move. We were talking the 2-day move. We got it.
Yeah, good call. Couldn't really get much below the pre-market lows, what you had, and then you turned around and then just kind of error when you got through that 23.40 handle up to 23.60, 60.50, the high. I will say Apple carried the market yesterday, Dennis. One of the bigger moves you've seen in Apple in some time.
What, was there a catalyst there that really kick-started it? Do we know anything, Spencer? You know, why Apple decided all of a sudden that everybody had to own it?
No, I don't know why.
Just technically, you think, Joel? We're in breakout mode. You know, you had a little pullback there for a day. You had a decent candle yesterday, which we talked about a lot of stocks having, you know, a little bit of a red dog reversal there, you know, the day before. And then, boom, breakout city and Apple to new all-time highs.
Yeah, you talked a little bit about, changing suppliers or something, and I don't know if that got people interested, but you cleared that former all-time high, which was 142.30, I believe, and then just kind of took off, got up to another whole number, 144.04, trading down only 24 cents in the pre-market. But let's see if the offers start to, gather here now at 144. Before we get away from it here, let's talk about General Motors. Did you see the move in that yesterday, Dennis?
Yeah, GM, huge move yesterday. And you know what? There's another one. You know, I bought this stock on the open, actually, and it would have been a good one, but, you know, scalper blood with me. I got out in the first nice green candle when the thing popped up 30 cents, and obviously I did not anticipate the stock going another $1 after that. That was a huge move for GM.
Spencer, give us a drive.
This was a classic. I guess we can call it a classic David Einhorn move right now. He tried the same thing back in 2013 with Apple, where he is obviously a big investor in GM, owns about 13 million shares. and sent a proposal to the company basically saying that they should, in an effort to drive up their valuation, they should split their stock into two share classes. One would be a dividend-focused stock, the other would be a more growth-oriented stock, and the two stocks combined would be worth about $52.11. He calculated, so increasing the company's valuation there. Obviously, it's something that GM has struggled with compared to Tesla. In terms of valuation, but so we sent this proposal to GM. They rejected it as it stands right now. I don't think we've heard the last of this story, or maybe we have, but it's definitely something worth watching for sure.
Just a crazy big move there for GM out of the norm. And you've been talking about 50% retracements here, Joel. And what is the GM? So if we go 39, well, I guess actually the high was 38.55, down to 34. I mean, yesterday you had to be pretty dang close to that 50% retracement of the recent move.
Yeah, 4.5, 2.25. If you use 34, that would be 36.25. Nice call on that, Dennis. You had the rumblings out, I think, in the morning. Did we get Einhorn's note before he went on, or did he put it out before he went on CNBC? Because it was just kind of like a classic where the note was out there, and then when he actually came on and was on CNBC, then it actually started to sell off. Big move. Let's see what happens. We're 50 cents off the 36 whole number. Let's see if the offers gather there. Yesterday's high, 36.25.
It really was like a buy everything rally yesterday, though. And we talked about it a couple of days ago. Why I didn't want to get bullish is that, this market just seems to, once you pull back 2, 3, 4% on stuff, people come in with their buying shoes on. That's really what they did. But even stocks like the retailers, which, nobody has been buying, were catching bids there yesterday. You were alerting me to the move in Sears. SHLD was a total short squeeze going on yesterday. 2-day move again. And we're going to just explain the 2-day move one more time because it worked like a charm yesterday. 2-day move, basically, when you get, a big move, a lot of times the next day you'll get some follow through. So that's why I was saying yesterday on the show, if you break out through the highs on some of these stocks, yesterday's highs, look out because we could continue, and that's exactly what we did. And Sears had a big move going from 839 to 958. Well, had a bigger move yesterday. Took out the high of the previous day and ran all the way up and closed up at the high at $11.30. That's a short squeeze.
And maybe they should announce that they are no longer going to be an ongoing concern more because...
I know. That's the crazy thing because you do have that, headline there from 2 days ago or 3, or maybe it was a week ago now, because, I'm dating myself here. But I think they said something, broke out and said that, what was it, Joel? Something about, not knowing if they were going to be able to continue, like being a going concern.
Yeah. And that you could see the gap down in the chart. It just the way they use the news. That was the day that we broke under $8, made a low, and ended up, closing right at 8. But then you talk about your 2-day rule. It's a 3-day rule on this one, straight up to 11:30 yesterday. That coincides with another high that you had going back a little bit, so that should be a significant level. I guess they're paying the real estate value at more than the entire operation.
Possibly. But then they spun off the one, Land's End or whatever. What was the headline, Spencer? Do you have it?
Do you have a headline for it, Spencer?
Yeah.
The headline from the other day that really knocked it down. The going concern one.
From Sears. Yeah, it was let me find the exact wording for you.
I'd like to just hear exact. Oh, here it is. I found it too. On Tuesday, March 21. So if you've got, otherwise I've got to from the Benzinga Pro.
I got you. Sorry. Our historical operating results indicate substantial doubt exists related to the company's ability to continue as a going concern.
That's what Sears Holdings comments. I'm just going to read this again. Our historical operating results indicate substantial doubts exist related to the company's ability to continue as a going concern. Anybody who came in and was selling it on that news, you can imagine, you think, okay, well, this is big trouble. This was on the night of the 21st. They came in the 22nd, you had the big gap down day. That's when we gapped down from, like Joel was saying, from $9 down to $7.60. But, you probably have some people saying, okay, that's it. I'm out of here. It's not even saying this thing's going bankrupt. And you probably have some other people saying this thing's going bankrupt. I'm going short here today. So you probably trapped a lot of people, short-term people thinking, okay, this stock's in real trouble. It's going to be like $4 or $5 here in a hurry. you trap those people, man, because this thing has been straight up since then. 5 days. This is your classic short squeeze. This just shows you how irrational this market can get. Just because a company says they may not be able to survive doesn't mean it's going straight to zero. And if you were shorting this thing on that news down at $8, you just quietly in 5 days lost 40% of your money.
And that day that went down, went down to 760, closed at 798. You traded a little over 4 million, and you hung out at 8 for one day. A couple light volume days, big volume day yesterday, over 5 million in Sears. But I'll just put some emphasis on yesterday's high of 1130. On January 5th, you had a high of 1119, so that represents the high for the year. So big area, only down 10 cents here, but wow, I tell you what, that just goes to show you, using the news can really help you sometimes and hurt you sometimes as well.
You gotta be, the news is a tool in your toolbox. When you just take it as face value, you've got to analyze a lot of other things. Crowded trades is the big thing you see with the news a lot of times. When everything is obvious, and then you get the obvious news coming out, and or you get a statement. Sometimes, trades get crowded the other way, and when a trade gets crowded with a lot of short-term traders going the same direction, often the stock will reverse there. But it's a warning. When you're short a stock, even like JCPenney. Let's say JCPenney here. As a stock that seems to be going the same way of Sears, got down to, $5.46. It started catching a bid the last couple of days. It is actually bid up here today. It's one of the only stocks that seem to be up here on my screen here this morning. You just got to be concerned, if you're short a stock like this as well. Like, that's why I hate shorting stocks when they start getting down into low single digits after they've been up, $60, $70, because these vicious little short squeezes really can get you.
Yeah, I mean, your risk is unlimited. Your reward is how close it gets to zero. And little caveats like Lampert and Fairholme bought 16. I mean, that's not a huge amount of stock, but they bought it on the plunge. So, yeah, just be careful.
Jumping over here just to some other earnings, or actually, let's go into the Vertex news because this is your big mover here of the day in the bio. Then in the biotechs here, Vertex Pharma is trading up 17% here this morning. Spencer, what is the headline driving for VRTX to huge gains this morning?
Yeah, their combo therapy significantly improved lung function in late-stage trials. It's obviously good news for that, which is the reason for the spike. They confirmed 2 phase 3 studies met their primary endpoints.
It's a big pop here for this stock here, Joel, VRTX. Give us some levels here. First tell us about the after hours action last night, because this thing was even higher than 105 last night, and then break down some levels for us.
110 print is what you got on the initial news.
On the kisser?
Yeah, 110 even. Yep. And then you backed off here. Since reaching 110, you've had a nice sell-off down to 102.30. So I would keep an eye on those two levels. 102.30, I have a lot of air underneath that. Had a nice setup on the dailies here. If you were just not looking for drug news, but just looking for a setup, you had 1, 2, 3, 4, 5, 6, 7 lows in a row right in the same area here, right at the $89 area. Going to the dailies, man, we haven't been in triple digits in quite some time. We got over 100 in September, 102.49. We're trading above that. I don't know, Dennis. This is a tough call here. I'd say I don't think we get back up to that pre-market high.
Yeah, I don't think we're going to see 110 there either. And, obviously that was the high. If you go back into January 15th, that was the high rate on the kisser up there. Well, just under 110, so 109.94. It's a big number for it. But, I mean, this thing's going to trade some stock, and it's going to be a wild child, and it is a $100 stock. So it could do a lot of things, some good drug news there. But I hate chasing these things up. If you're coming here buying this thing up 17%, that's the definition of chasing. I believe the train has already left the station there. So I'm just hands off on this. Let it digest. Let's set it down for a couple of days if you're going to trade this technically. Let it get at least a high or low on this day, and then you at least have a reference point, because this is still in price discovery mode.
Yeah, I'm sure there's a lot of people owning this thing. Love to see that 110 again, but we'll see. Once again, opening print will be very important.
B. Trudell is asking us about Restoration Hardware, and they did report earnings last night, and holy cow, man. Here's another one. If you thought this thing was in trouble, and we and Joel did. I mean, me and Joel probably have some egg on our face. We have not liked this. I mean, we haven't liked this stock forever. So, we've stuck with our thesis there all the way from probably $80 down to 30, but, we still didn't like it last week, and this thing's been popping here now. In February, this thing hit a low just down under $24 or just under 25, down 24.41. This thing's quietly almost doubled here in the last month and a half, and now I feel like you're chasing. And if you're getting in restoration hardware, I don't get it. In a world of retailers getting hurt, I never got this story. Like I said, me and Joel have been in there before. And you've said the same thing I do. I don't get who buys stuff in the store, but obviously some people are doing something. Give us the earnings there, Spencer, and then Joel break down the technicals.
So Q4 EPS of 68 cents, that does not compare to the 5-cent estimate, and sales of $586.7 million versus $485.02 million. So they beat their sales estimate by about $100 million.
Significantly beat the sales estimate. This is a huge pop here, and I still think this is a lot of a short squeeze as well. I think there's a lot of people who are banking on this company being in trouble, and it hasn't materialized. I mean, it's got the big pop. It's been on a vicious run here for really the last 2 months, like we talked about. What are you thinking now, Joel, in Restoration Hardware?
$44.97. That is your pre-market high. We're only 67 cents below that level. 45. Nice psychological level. I see a high right at 44.47 in April. So let's say it does clear 45. Then your next daily high goes back to April 28th of 2016 at 46.40. But man, oh man, if you're sitting on this thing from under $30 and here you are in the 40s, got to be hard not to ring the register. The only reason I'm I'm just not, I'm saying why it might not go back down is, man, we're only 70 cents off that high. I know it's still early, but if it was at 44.97 and was back at like 42.5, then I would say, yeah, the high is in. But the fact that it's still even hanging up here at the 44 handle is a little bit puzzling to me.
Well, I'll tell you, it's not puzzling to me, because you know what the short interest is on this thing?
80%.
Take a gander. 44%.
Ooh. Okay.
You are crushing, and I mean crushing, some shorts on this. So when you're talking over 40% short interest, that's the catalyst here. I mean, people are getting murdered here that were banking on this company being in trouble. And, it's bounced back. And this is something you've got to be aware of. When you see those short interest, and traders that are new to trading often look at short interest and they say, oh, it's 44%. Everybody thinks this company's in trouble. I'm going to bet on it going down. But short interest is often a contrarian indicator. When you get the short interest really high, these are people who have already sold, who need to cover at some point. And when you get any type of good news, those guys start scrambling around, because shorts are typically weak hands. You have some longer-term guys like Ackman that bet on stuff forever, but it is expensive to hold short positions. You've got to borrow the stock, locate, and not only that, you have obviously unlimited loss potential there too. So shorts are typically weaker hands than longs. So they just don't forget about the position. Oh, I'm short, I'm just going to forget about it and it'll be okay. They're actively usually managing, meaning they're active to get out of positions too, meaning you get short squeezes. And, he had the gap and go really here. It must have been, back in February. I'm not sure what that was, if that was an upgrade. I think it was maybe an upgrade.
I think it was a Goldman Sachs
it's just
upgrade.
Continued here. So, you're punishing the shorts on a stock like this.
And, also keep in mind that, let's say you're on the other side of that trade and you're long. I mean, Dennis, I'm just curious, what's the bid offer in this right now? Like, I'm sure it's
fairly tight, 44.15 to 44.44. It's traded a lot of volume, already 46,000 shares this morning, traded a lot last night. It's fairly active here. You can easily get out in the 44s.
Okay. All right. Well,
all day long right now, you can get out in the 44s, and these things can squeeze for a long time. I'm not coming here short and joining that 44% crowd. So, but eventually these things, come back down to earth too.
Yeah.
So eventually the shorts start to get covered and the things come back down to earth. But, even Bob Wire talking about Tiffany's, TIF, like, it's had an impressive move too. It's been some of these stocks, which you wouldn't think, would be, the leaders here, have really started to take off. And that's just another good example of one, Tiffany's, which is, expensive products, stuff you wouldn't think, in a retail world that is hurting, you wouldn't think Tiffany's would be the stock that people want to own. But Tiffany's just quietly has come back, and it is actually only now 14 points off its all-time high, which was back just in 2014 when we got up over $110 a share. We're back here $96 on Tiffany after being under 60 just last year. So this is an impressive move here for Tiffany's too.
All right, just for our Tiffany's traders here, you do have a potential triple top, though, and something to keep aware of here. You do have someone trying to wiggle out of some stock. Looks like it's at the 96.50 area. They've given it a little room. I'll just give you three of the last four highs: 96.23, 96.42, and 96.20. Still trading in the 96 handle, though, but respect that resistance for now, potential triple top.
Downward dog talking Ralph Lauren, and yeah, this stock had a 2-day move as well, and it's starting to look better on the charts. And I'll tell you, the retail stocks, all of them had pretty good candles yesterday, but we've seen this so many times in a lot of these retail stocks. They get a good candle, and you think, okay, well, this is the time it's going to start going, and then the next day they just give it back. I mean, Kohl's had a good rally yesterday. Macy's finally showed some life. Macy's has just been stead money for so long here, 27.72, and it put in a little double bottom, 27.73 yesterday, and straight up to close up at near the highs of 28.55. You Nordstrom had a nice candle. Dillard's had a nice candle. So the big box retailers were doing really well. And then, like you're saying, Ralph Lauren, VF Corp, they all had pretty good days yesterday. So, the clothing makers as well were rallying. So they were buying retail yesterday.
And real quickly, Ralph Lauren trying to get into that gap area. Yesterday's high, 81.92. That's the highest level it's been since the report. Now up over 82 in the pre-market. Probably an odd lot. Looks like an odd lot traded there. Yeah, a mighty 2 shares, but a lot of error between 82 and 86. And downward dog, I've just pulled up your SSNI again, and man, oh man, someone still got their foot on the sell. 1085, 1084.
$11.
Yeah, look at that thing, man. Big seller at 11 needs to clear that level.
That's what it needs to get through.
Whew.
Yep.
And thankfulness, what Tesla Beast? How did the Tesla Beast do yesterday? Oh.
I don't know. That thing is just relentless. Yeah, it gapped up, and obviously it was already gapped up in the morning. It didn't continue, it's not as strong. I mean, the money's already moved into this thing. So, and you do have a lot of overhead supply. The one thing you're jumping in Tesla here now is you got those pesky highs in the 287, 286, 283 area. So, I don't know. I don't know if I want to be buying those things. Maybe you start thinking about $300 on this, but you're late to the party on this Tesla train too. This was $180 in December. Now it's $200. It's put on $100 in the last 3 months. You're talking about a stock up 60% 3 months. That's the definition of chasing. Sometimes, you make money chasing stocks. I never do. That's why I don't chase stocks, and this is the definition of chasing here now.
Let's see how Tesla is doing in the pre-market here. 280 and change, just hanging out here at 278. But just take a look at those daily highs and the 280 handle. I think one of them was like 283, and then 287.39. We hit that just back at the February. What's the old time? Is that the old time high in this? 291.42. So man, 280 to 291.42 may find a few sellers.
I did see some Tesla commentary go by on my timeline there. I'm trying to find where it was. Oh, I don't have it up here in front of me, but somebody was commenting. Somebody reiterated their $140 price target. Do you know, Spencer?
Yesterday it was Packcrest.
Yeah, and what did they say?
They said,
because they've been way wrong on this.
Yeah,
they said that shares could ultimately come down. So that's first things first. But they estimate that Tesla can deliver 428,000 cars at an average selling price of about 58 grand in 2020, while adding an additional 2.7 billion battery revenue. So those are their.
That was yesterday.
Yeah.
And then today we've got Cowen.
Oh, I didn't see that.
Cowen came out today and maintains their underperform rating and their $155 price target. So they're basically, still staying bearish here. So you got a few analysts here that are sticking to the bear theme here. I mean, $155 price target seems way out to lunch on this thing now, but Cowen says they're sticking with it.
Why?
So 155, 277. You'd be making some money if Cowen's right, but I don't know. I'm not coming in here and betting against. What's the Nick Shaheen saying that I always mess up? Too high to chase, too hot to short. Did I get it right?
Yeah, too high to chase,
Close.
Too hot to short. Yeah, but
Close anyways.
But Nick's analysis basically says, if you're valuing this on a car company, Yeah, $155 or whatever on the amount of cars. But if you value it as a technology company and an
Yeah.
energy company, then it's different. I don't know. I mean, I'd rather be long than short, but just picking an entry and identifying the risk is a difficult thing to do.
Let's jump over here just to a couple other earnings plays from last night. We had Dave and Buster's, PLAY, one of the great ticker symbols out there. Spencer, how'd Dave and Buster's do?
They did Q4 adjusted EPS of 63 cents versus 59 cents, sales of 270.2 versus 269.8 million. So they beat both those numbers. As far as their fiscal year 17 numbers, they project net income to be 101 to 105 million dollars. Sales coming in line with the estimate, comms up 2 to 3% for the year.
PLAY saw off a bit here, running up ahead of the report yesterday. It's one of those stocks that is very loved by the street. They probably didn't blow it away enough to continue on this merry party here, but there's support below here, and Joel's going to find you.
Well, pre-market print 57.26. I don't know what.
You think that's safe?
Yeah. I don't know what someone saw in the report to do that.
They don't read the buy the dippers report when you're selling something 5 points down. Those buy the dippers lurking everything, at least everything that's hot.
I think I'd focus on $60 today. You had a series of lows at 60.18 and 60.28. Yesterday's low 60.60. So after the report, let's see if someone still wants this in the 60 handles. Just a couple points from that all-time high that was made yesterday at 62.88. All-time closing high 62.19. So 60 is going to be the battleground here in Dave & Buster's, the adult Chuck E. Cheese.
You see that move yesterday, just before I get to Sonic, which I'm going to go to on the earnings report. Did you see that continued move in Darden restaurants?
Yes.
That thing was wild. That just took off. There was no stopping it. Opened up near the lows of the day as it gapped up. The classic gap and go, destroying anybody who thought it might come in. 78, 79, 80, 81, 82 in the first hour. The first hour just blew 3 more handles. This Darden restaurants, it's a food. It's a food. It's a restaurant. So I don't know. That's a crazy move too. But this difficult market we've been talking about for a long time. It's hard to short this market.
Opening print of 78.98 and the low of the day 78.91. So if you shorted that thing off the open, it didn't take you long to realize you were red immediately. We backed off. We hit 82.82. It looks like someone got an 83 print here in the after hours trading. That's an all-time closing high there at 82.62. So we'll keep an eye on that, as well as the high of 82.82.
So I had Sonic report here after the bell, SONC, and Spencer's got those numbers for us.
Yes, I do. Q2 EPS 15 cents. That beat by a penny. Sales of 100.15 mil versus 104.97 estimate. So they missed the sales number by a little bit there. They see their fiscal year adjusted EPS to be down 7% to flat on a year-over-year basis. Same store sales to be down 2% to flat on a year-over-year basis.
SONC selling off a bit, but it's coming back here too, Joel. Buy the dippers lurking in Sonic?
A little bit. You got a pre-market print down to 22.23. That represents, see, what was the low of the move? The low of the move was
real close, 22 and a half.
Yeah, so I'd keep an eye on that as a potential buy to cover short zone. Above 24, yesterday's high, 403. Then you had another high at 401. So in between 22.31 and 24, it could go anywhere. Above 24, you get a breakout. Below 22.50, that's the current low of the move. I think you have to hit the exit. But have you ever seen a commercial with worse looking food than the Sonic? Do you like the Sonic food, Spencer?
I've only been there once.
I've had it before. It's fine.
Really?
For fast food.
They show those hot dogs and stuff and all that stuff on there. I'm about ready to grab a Zantac when I see that. I don't know.
Yeah, it's got a following though. Some people like that Sonic burger, so it's hard to say. But I like I said, I've said this before. I only ate on the value menu there, and it wasn't that great. But I think I chose wrong. So
Okay.
It's no Shake Shack burger, eh, Joel?
No, it's not. We gotta get you over again and try that. Maybe come over at like 10 in the morning.
One day I'll be able to try that Shake Shack. Jumping, we just had imbalances come out, so I'll just quickly give them to you. We've seen a few buy imbalances here in some of the financials. Morgan Stanley did catch an upgrade this morning here from Deutsche Bank, so it's going to be stronger than some of the other financials. But 156,000 to buy in Bank of America, 55,000 to buy in Citigroup as well. So a little bit of strength there. I'm concerned with the financials with Brexit though, so I don't know if I'm going to be playing them long here again. Yesterday, they've had a nice 2-day run here. Maybe a pause here, with Brexit becoming official. You're actually seeing some weakness in the European banks here this morning. Deutsche Bank's down about 1.5%. Barclays is getting hit down about 1.2%. So cautious on the banks here this morning. Jumping over here, just other imbalances. Man, they are small. These institutions aren't showing their hand. Do have Ford with a buy imbalance of 127,000. I mean, GM, we already talked about that move. That was incredible yesterday. Ford had a little bit of a sympathy move, but it really didn't get kick-started like the GM. That's about it. They're pretty small.
All right, what is this? TNXP, that's a big mover. Do we have some news on that one this morning, Spence?
That's not one that I've heard of before.
Onyx Pharmaceuticals.
They are going to present an FDA breakthrough therapy designated PTSD program at the Microcap conference later today.
It's moving.
All right, let's just do some quick levels here. If there's anything.
Did that do some type of reverse split or something? Because it went from 33 cents there last week. And we don't follow this company. So Chad, help us out here.
1 for 10.
1 for 10 reverse split.
Yep.
Okay. So, so if you adjusted that chart, then you're actually just starting to get the breakout there now. So, because the adjusted price would have been $3 or actually closed that day, 1 for 10. It closed that day around 50 cents. So, or actually 40 cents. So, yeah. So the adjusted closed around $4. So, yeah. So today's the breakout day for it.
I mean, it's hanging up near the pre-market high. I can't really tell anything from that daily chart. So,
messes it up.
614 just print. So, it's just, it's going up. Really hard to give you levels. If you're long, maybe throw things out to half and whole numbers. Try and get, sniff out the sellers. A couple stocks from DC1, and let's just start with Williams-Sonoma since we're talking about retailers. Did that one get off the mat yesterday?
I'm assuming it did. It's up another 50 cents here this morning, too. Not sure the catalyst here. Maybe it's Restoration Hardware, probably a sympathy move here, I would imagine, with RH. They do sell similar stuff there, so it is bid up here this morning, up at $50. And yeah, it got kickstarted there a little bit yesterday. And you know what? This has still been in range bound, though. Man, there's been a lot of this. Is like the total range between like 47 and 51. So hard to get excited about this thing if it's not above $51.
Yeah, and we got into the $50 handle 1, 2, 3, 4, 5 times this year, and just couldn't hold it, whether it was on the day session or the following day. So the fact that it's up here in 50, I don't know if it's well bid or well offered at that level, but holds in the 50 handle, takes out 51. See ya. Let's say hello to 54 here. Maybe finally waking up. Not sure what the news is on it. And then also OLLI, Ollie. Dennis, you ever traded that one?
I have traded it before. It's relatively new, so we just had this thing IPO just back, I believe. Oh, it's been out there for a little while now, 2015. So July of 2015, and it's been one of those retailers. These bargain retailers, these cheaper stores here have actually held up quite well here. It's been kind of this movement from your traditional big box stores into some of the bargain stores there, and Ollie fits that bill. And it's up here again this morning. Here was there earnings on this? I think Spencer. OLLI? I think there was something.
Oh, well, wouldn't you know what there was? I didn't.
I thought I saw. I didn't have it written down to talk about, but I thought I saw it on the earnings calendar.
Yeah, well, they beat by 4 cents on the EPS, and they beat the sales number by about $3 million, and comps were up 2%. And then the guidance for the fiscal year 2018 came in higher, and the sales guidance came in a little bit in line as well.
$34 here. I don't know. What do you think, Joel?
I mean, you took out the double top at $33.50, so as long as it holds that, you can go north. Pre-market high, almost up at $35. So pre-market high, $34.95, and some volume being thrown around. So make sure this holds $33.50 on the downside, and make sure it takes out $34.95 95 on the upside. Spencer, you got a guess for us here at 8:35?
Dude, today must be a MarketFi day. We've got Tim Melvin on at 9. He is on the MarketFi platform. We also, right now, are going to be joined by Alan Brockstein, the author of The 420 Investor.
Yeah.
Maybe the best, well, not maybe, he is, of course, the best authority for the marijuana market in terms of stock. So we're going to be right back with Mr. Brockstein. And welcome back, traders and investors, to Benzinga's pre-market prep. We're on the line now with Alan Brockstein of the 420 Investor on MarketFi. Alan, how's it going today?
It is great. I am. This is the second time I've been on the road with you guys, and this time I'm in San Jose, California.
What's going on there?
Yeah, it's really cool. It kind of tells you how the industry is maturing. It's a conference catering to institutional investors and family offices talking about the cannabis industry. So I spoke yesterday and got to learn a lot as well.
And is there? I would assume there is significant interest. That's why you're there.
Yeah, it was amazing. There's probably like 400 people here. I usually don't hear people talking about these size funds. It's pretty interesting. A lot of people, they're probably more interested in real estate necessarily than going directly into the industry. But I spoke on a panel about publicly traded companies. There are probably about 150 people in the crowd.
Okay, so let's talk about this. So what are the institutions and the family offices interested in? You said real estate, but can you be a little bit more specific?
There's billions and billions of dollars worth of cannabis production facilities and dispensaries across the country, and the industry's starved for capital. So a lot of times these businesses, they own their property often, or if they're trying to get into the business, they'd like to buy it, but they can't. So they'll turn to these third parties. There's a publicly traded REIT on the New York Stock Exchange that does the same thing.
So that's interesting. So the institutions are looking at the real estate factor. So it's been a few months since we had you on the show. Give us a little bit of an update from a macro point of view, and then we'll get specific as we
Sure.
go on.
The year's off to an interesting start. We had this big rally in front of the elections in September. That peaked out right before the elections, really, and we were doing a normal consolidation. And then as the new year began, there was a lot of speculative interest in the sector, not in the higher quality names, but in a bunch of penny stocks, basically. And then all of a sudden, and some of your listeners may not be familiar with this, but Sean Spicer made what was really the first comments from the Trump administration, and they were really kind of silly and maybe potentially scary. And then Jeff Sessions said something and kind of reiterated his 1950s style thinking on cannabis. But these things really spooked the market. So there's a pretty big sell-off, and the higher quality names continued to drop. And gosh, the ones that I think are probably the highest quality in the space, a lot of them were down like 25 to 40%. But I think big picture, nothing's really changed. And there's actually been some really interesting interpretations that I kind of agree with. The administration, they've got their hands full with a lot of other things. And this whole idea of cracking down on the cannabis industries, not really looking like that's what they're going to do. They're going to crack down on those that are breaking federal law and state law. I think that's kind of the nuance that people haven't picked up on yet.
Let's jump into some of the stocks that you feel are the best in the industry here, because we know there's a ton of companies, and maybe a lot of these are smaller and might not make it. Which ones do you like the best here right now? We know you've liked GW Pharma in the past, but what other ones do you like here? That you think are good, viable companies going forward.
So I have to be careful there. When I say that, then I leave some out and all that. The bigger picture.
Well, give us just a.
Yeah, it's still really speculative. Let me talk from the top. So When I say the better companies, I'm talking about companies that can generate revenue. And there's a bunch of stocks. I tracked about 10 at the beginning of the year, and now it's maybe 14 that can do about 10 million a year in revenue. I'm sorry, 5 million a year in revenue. Some of them 10 million or more. So those are, I think, really the things that people should be focused on. And I like to fully disclose a couple of them are my clients at New Cannabis Ventures, but they both fall into that revenue bucket. And that would be one that people aren't really familiar with, Grow Generation.
What's the ticker on that one?
GRWG. And it's pretty much off the radar, and it's a very simple story. They have hydroponic stores in Colorado. They just opened one in Nevada, which is going fully legal. And then they have one, and they just bought another, so 2 in California. And so that's a company that can, I think, do about $13.5 million a year in sales this year. I think.
And how much is the company worth? Just to give us some, value.
Yeah, there's about 18 million shares, and it trades under $2, so it's about 35 million market cap.
Okay, so when you're talking, this company could do up to maybe 5 or 10 million in sales. You're talking.
No, I think they can do 13.5. They probably did 8. We'll find out. Their 10K will be filed.
So this thing's only trading like 2 to 3 times sales.
Correct, and not losing a lot of money. When I did that analysis at the beginning of the year, a lot of the companies that have sales are just burning terribly. So that's one. And another one that it's a client of ours, and I'll name some that aren't, but Kush Bottles, and they're at this conference, and Kush Bottles does packaging, and they're in all the major markets in the country. They've been expanding. This is the one that's covered by Cowen and Company, and the symbol's KSHB. And she's here too, the Cowen and Company analyst, Vivian Azer, who covers tobacco and alcohol, but she also covers the cannabis industry. And one of the 2 stocks she covers is Kush Bottles. The other is Canopy Growth up in Canada, which that's another thing we can talk about. But Kush Bottles, I don't have my numbers in front of me. I'm traveling, but they have more than 10 million a year in sales, and their market cap. I'm trying to remember the numbers. Shares are about 52 million shares. They had a nice day yesterday, but so a little bit over 100 million. But that's kind of. I think those are 2 good examples. I've talked about Srna before, SRNA, and they sell equipment to cultivators to help them with energy efficiency. And that's another one. Their sales are a little bit lumpy. It's a bit harder to forecast. But there's
this
another
stock's
one.
Only a 16-cent stock, though.
Yep, and I'm not looking at my notes, but they had a problem with some convertible debt, and they've resolved it. They got all their debt holders to take stock and warrants, and so with that they were able to fix problem. I think there's like 180 million shares off the top of my head, and so that gosh, I'm in California, I should be able to do my math, but it's not a very big market cap, and they can probably do about 10 million, maybe even more in sales.
We're on the line with Alan Brockstein, the author of the 420 Investor Letter, and I still hope we can have you on April 20th, Alan. But I want to ask.
I don't have plans.
Okay, I got to ask you about this stock, and it's been puzzling me the whole year. Cara Therapeutics. This is the biotech stock that doesn't know it's in the biotech sector. DC1 is asking about it, and I just Googled it and said something about cannabinoid receptor agonist.
Yeah,
I'm
going to stop because I don't even follow the company.
Okay.
There are a bunch of biotech companies that are in the cannabis space, and I pay more attention to them than Cara. That's really leveraged to something completely different. Okay. I understand that they do some cannabinoid receptor type stuff, but they're not doing anything with cannabis. I don't even think they're doing anything with cannabinoids, actually. It's like very peripherally related, so I don't follow it.
How about ESSI?
So I think that's a joke of a company, and that's all I'm going to say on that one.
Okay.
Don't sugarcoat it next time.
That one's a pump and dump, so I don't pay too much attention to it. It gets a lot of trading volume, and honestly, it's in my index just because traders trade it. But good luck. Don't be left holding that one.
Tell us how you really feel, Alan.
Yeah, I know, right?
Let's jump to Canada here, because I always ask you about the same company that was from my hometown where I was born in Leamington, Ontario, is Aphria.
Oh my gosh, those guys have been killing it.
Yeah, and everybody in the town owns the stock, and I'm like, everybody. I get a question about this like once a week at least from my friend. What do you think of Afria? What do you think of Afria? And I'm like, I'll ask my buddy Alan because he knows the sector there. I don't really follow the pot stock, so I'm asking you now for all of my friends who are listening in Leamington, Ontario. What do you think of Afria?
So, that's one of the.
And the symbol. What's the symbol
Yeah,
in the U.S.?
APHQF is the symbol in the United States.
APHQF in the U.S.
And they just uplisted to the Toronto Stock Exchange. So they're one of the three of the Canadian cannabis companies trading on the TSX. And the symbol there's APH. And so, they're one of the three big publicly traded companies with more than $1 billion market cap in Canada. And, they've been very deep into the strategy of investing in other companies. It's been amazing. And, I think I just kind of like to point it out. I don't really have a strong view one way or the other. Sometimes I think people might view that negatively if they look distracted. Some people might say, they don't have confidence in their business, so they're doing all this. And I think the flip side is they're really long-term thinkers, and they're trying to be more than just a cannabis cultivator. And that's the one. Actually, there have been two stocks, but that's the one big one that was able to exceed its November close. The rest of the sector up in Canada has been consolidating. Now, they didn't take out their November highs, but they did, for a few days, close above that prior November high close. And they've been flirting. The high was above 7 in Canada, but they've been flirting with that $7 level even as recently as March. So,
Alan, what about valuation on this one? Because you're talking a lot of these other pot stocks, and they got market caps of 50 million, 100 million. Now you're talking about $1 billion one.
Okay, so the market's rational in this sense. You don't get good quality stories like out of Canada for on the cheap. It's not a Warren Buffett kind of deal, unfortunately.
Right.
I was really pounding the table in the sector last June, so about 9 months ago, publicly, and that was a great time to buy. Now it's a little bit more speculative, less so than it was before. The market caps are high, very high, compared to any sort of normal metrics like 2017 sales. They don't really have a lot of earnings, although Afria closer than some others. They don't burn as much, and they're slightly cash flow positive, I think. But
what's their sales look like? I'm just trying to get a grasp here. When you say $1 billion company,
it's an odd thing. The way you really need to look at these companies, most people say, and I tend to agree conceptually, is you have to look out post legalization. And so right now, the whole sector doesn't even have the capacity. They have a ton of cash. Like these guys have over 100 million in cash, but they're going to turn it into productive capacity. Hopefully that goes well, not just for them, but for everybody. But Canada is going to legalize, they're targeting July 1st, 2018. And so people want to value these companies on what it looks like after legalization is taking place, which makes sense. But I think it's a tough exercise because, you have to make a lot of estimates. Will they get their construction done on time? Will they be able to scale up in time? But the sales estimates are over 100 million in the out year. I'm not looking at right now, but they're big numbers. So when you look at things like 2017 projected sales, which are going to be pretty robust, over 20 million, it's pretty high price to sales, but it's further out. It starts to look a little bit more reasonable. But I think that's a good debate people can have. What's the right valuation?
And what about legislation in the UK? Big market potential there. You have any updates on that?
In the UK, I haven't been paying as much attention to that. It's Germany is like really the big story. And that was one of the things I said at this conference yesterday, especially for institutional investors. That is going to be, so right now Canada is the global leader. They have the most developed market. It's easy to raise capital, and their sales, everything's going, and they're going to be fully legal. They'll probably still be the leader, but in the medical space, Germany is in the process of finalizing kind of what it's going to look like, but it's already known that insurance companies are going to reimburse medical cannabis coverage, and it's going to be available in the pharmacies. So that's going to be a great industry, and it's kind of interesting because there are some companies out of Canada that are either going to be exporting into that country, at least in the short term, to fill their needs in the immediate term. But I expect to see Canadian companies invest their capital into either joint ventures or into actually, if they're able to actually own the whole license to be involved in Germany.
GWPH, real quick. What about that one?
Yeah, so, I caught a lot of heat over this. I said at the beginning of the year that it was going to be a back-end loaded year. I didn't see a lot of catalysts. Somebody said, well, what about this? And this played out. They had some good news on their clinical trial for brain tumors, but if you look year to date, it's really lagging. The biotech ETF that I think should track it the best is XBI, the S&P biotech, and it's lagging it big time. It's also lagging IBB a little bit. That one, that index is dominated by really big biotechs. So I think the issue there is that they continue to kind of push out a little bit on when they're going to actually file with the FDA. First, it was going to be in 2016. Then it was pushed out to by June 30th, 2017. Now they're saying mid-2017. That was kind of the news that came out when they reported their Q1 in February. And I think it's actually positive that they're taking their time and making sure that they do it right. But I think traders are going to be on edge. And when after that NDA gets filed, in that interim time frame, a lot of people are going to be excited because they're going to think it's going to be approved. But other people may want to take chips off the table. It's going to be pretty interesting to see how that plays out.
We've been on the line with Alan Brockstein, author of The 420 Investor. You can find that by just going to 420investor.com. It's on the MarketFi platform. If you didn't know before, you know now. Alan knows what he's talking about when it comes to the marijuana space. Alan, thanks so much for hopping on today. We will talk to you again soon.
Okay, you guys have a great rest of the week.
All right.
Thanks, Alan.
Thank you.
All right, Dennis, could you wake up the S&P futures here? We have traded.
Hanging out.
Yeah, look at this. I'm going to go to a 1 minute here. And didn't really move on the imbalances. And I never look at a 1 minute chart here. But we started the show here at 8 o'clock. And we've been in a little 3-point range. So we moved around a little bit. Did we do any upgrades and downgrades yet?
No, we didn't. And there are some interesting ones here, too. We did mention Morgan Stanley got upgraded at Deutsche Bank to buy, and that's what's driving it up. But we didn't mention any other ones. And here's a big one. Goldman Sachs is downgrading Dunkin' Donuts to sell. So they're not liking Dunkin' Donuts. DNKN stock closed at 56.11. It is trading at 54.15, down almost 2 points here right now. DNKN downgraded at Goldman Sachs.
All right, Dunkin' Donuts, one of the only. I'm a breakfast sandwich guy, and that's one of the only places where I don't like the breakfast sandwich. So
No.
I'm down.
How do you like the coffee? Do you like the coffee there?
Man, it's not as good as what I make at home. So 54.15. That's your last print. That's down a couple sticks on the day. But you got to see what happens at 53.50 area. I'll give 1, 2, 3, 4, 5 lows in a row right in that area. So critical area to hold. That also was the low when you gapped up. That was probably from earnings. So below 53.50, Katie barred the door here in Dunkin' Donuts.
Only other rating I'm seeing that really jumps out to me is Deutsche Bank downgrading F5 Networks from hold to sell.
FFIV. Let's talk it, Joel.
Wow, man, someone got real carried away. Hit 134.48. I think that might have been a whoops trade there. Let's see if there was any volume there on that little measly print. 2,500. Someone didn't have a good trade, but back up here, still trading down $5. This is a volatile stock. I don't know what to tell you on this one. I mean, you're not going to fill the gap at 145. Maybe get a replay at 140. I see a couple lows at 140.40 and 140.50. I call that minor support. Below that, under 140, I see double bottom at 139.
They're talking in the chat that Amazon got upgraded. Didn't get upgraded, but it got rated a new overweight, so initiated with overweight at Barclays, and they put a price target of $1,120 on this thing. Barclays had a lot of initiations there. Obviously, they didn't cover a lot of stocks, so new overweight for Google as well. They're putting a $10.65 price target on GOOG. I'm just trying to go through the Barclays report. Facebook, they put a new overweight on, $154 price target. GoDaddy, a new overweight on, price target $45. It's interesting that they didn't cover these things before. There's
Yeah.
actually a bunch of them here. I'm just trying to give you the highlights there. Snap, they put an equal weight with a price target of $24. Twitter, they put a new underweight on with a price target of 14, so not giving the love to Twitter. Market's kind of shrugging that off, though. But let's go back to Amazon here. That's what they were talking about in the chat. It is trading up $3 here. That's a big price target here from Barclays.
Dennis, sometimes what happens is like analysts move around and they were maybe covering those stocks in
Yeah,
another place.
good
So,
point. Good
yeah, so
point.
that could be 862.80. That's the only number I can give you here in shares of Amazon. That represents the all-time high. What's interesting about that is it's flanked by a couple other highs right in the 860 area, 860.86. So big move up, 2-day move from 835 to 856. Trading above yesterday's high, pre-market high right there at the all-time high of 862. Even is the pre-market high, 862.80 all-time high.
CyberArk, CYBR, that's getting an upgrade at Evercore here. FTNT is getting upgraded at Baird. That's Fortinet. So there's a few smaller ones here. If there's any other ones you want to talk specifically about in the chat from the ratings, let us know there. Obviously, you can go to your Benzinga Pro and get all the ratings here. Actually, let's just go into CyberArk because Spinner was asking about the technicals on CYBR. Again, that's getting upgraded at Evercore here today.
All right, CYBR, Avocor hopping into the fray here in a cybersecurity stock or software. No, it's CyberArk. Bunch of highs in the same area. Just hope it hasn't taken off. Let's see what it's done in the
Dead. It's
pre-market.
taken those out. It's bid up to $49.75. It had an odd lot just trade at $50.36. I'm thinking $50 probably hasn't the gas to get there on the upgrade. But there's definitely it shot right down through there. There's not that much in there.
Yeah, air up to 51, 50.98. That was your high. March 21. Now, if you're just waiting to buy it back on, the old resistance, new support, you got to wait to come back to 49.40. But doesn't look like we're going to see that today. Look out, not much until 51, and then up in the upper 51 handle, you have a pair of highs at 51.60 area.
You actually also have Spinner, thanks. You also have Needham rating it a new buy with a price target of 62. So I have two analysts on CyberArk here today. One, an upgrade to Evercore, and then initiated with a new buy at Needham here. So CYBR, the old double analysts getting bullish trick.
All right, and Panera. Wow, what about the current valuation in Panera? Well,
this stock is the honey badger of all restaurant stocks. I mean, this thing disappoints sometimes on earnings, and they rally it. I mean, this has got to be one of the hardest stocks to short. I love Panera Bread. I go in there, and this actually goes against my whole train of thought because Panera is kind of expensive, and I like cheap. But I go in Panera. They have that autumn soup that they come out with. The restaurants are always really nice. They're very organized. The service is good. I mean, I pretty much like everything. The experience of Panera Bread for me has always been good.
8 days in a row.
Yep.
The 8-day rule may turn into the 9-day rule. I wish you wouldn't have
Incredible
showed me
run.
this chart. Yeah, just look for
Late to the party though on this one.
follow through that 260.24 high. What were you gonna say there, Spencer?
I was going to say only stock I'm watching really that we didn't mention is Lulu. They report later today earnings, so something to keep an eye on. And 8:58 now, so we're going to call Tim Melvin. He's the author of Banking on Profit, also on the Market5 platform. Has some really good insight and reports and original research on small bank stocks, not your Goldman, your JP Morgan, not those guys, your smaller stocks. If you like your bank stocks cheaper, he's your guy for that. So we'll be right back right now with Tim Melvin of Banking on Profit.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel, and we have Tim Melvin on the line, the author of Banking on Profits. Tim, how you doing on this Wednesday morning?
Doing great, Joel. Just sitting down here in Florida, looking forward to the opening day this weekend. Ready for some baseball. How are you guys up in Detroit?
We're doing okay. We're trying to hold that 60-degree resistance level. Now, first of all, and I haven't started to do my homework yet, but I know you're one of the horse follower guests that we have on the show. Have you been doing any touting for the upcoming Kentucky Derby?
Nope, not at all yet. We're going to wait for a couple more of the of the Grade 1 stakes races and see how the Derby futures look. And usually start looking at it about the middle of April.
All right, and how your Orioles looking this year?
You know what? If our starting pitching holds up, we've got a good team. Starting pitching it's a huge question. If it goes well, we're going to be in it. If it doesn't go well, we could have a problem. So it's the starting pitching is the question.
All right, we're going to start you right out here with a stock from the chat, and not sure if you follow this one because it trades over 10,000 shares a day. But
yeah, I've probably never heard of it.
Bank United Incorporated, symbol BKU.
Okay, that's a Florida bank in the southeast that came out of the credit crisis, was recapitalized by Wilbur Ross and a bunch of other guys, and has really gotten their act together since 2009. Done a great job of growing assets, growing earnings. It's pricey by my standards, but they've done some smart acquisitions. Management has proven themselves to be strong operators. They do have some branch locations up in New York, but primarily they're here in Florida. And the rule down here in Florida, we just saw Stonegate get taken over by Home Bank of Arkansas, which I was really excited about, by the way, because I own Stone Bank and I own BKU because I had, at the end of 2014, we just bought every bank in Florida. Big, small, didn't matter. If they were domiciled here, we bought it because Florida is always the first state to consolidate, and it's the first state where things get stupid and ridiculously priced. So we bought it, and we're waiting for ridiculous.
Okay, that's a price target, not many analysts.
Price target is ridiculous. That's right.
Okay.
So we're at 1.54 times book on that. It's not great. It's not awful, but I said you've got great management. ROI and ROE and ROA are consistently at the top of the pack for banks. So if you're a little more growth oriented, this is not a bad pick.
All right, and Ed Parker here, just throwing out here, CZWY and WEFP merger, question mark. This WEFP, man, this thing doesn't even trade by appointment only here. That's a thin one. Any input on these two issues?
Yeah, we own CZWI and have for some time. I have it in my wife's please don't lose my money because I can kill you in your sleep IRA portfolio. Great little bank, good management. This is an accretive deal that adds to book and earnings almost from day one. We like the stock. We like the merger a lot. They're going to close a couple branches to create operating efficiencies. So really good size cost takeout in this deal. So, the Citizens Community just raised their dividend by 33%, up to 1.17%. Stock's trading right around book value. I like to buy them below book. You know that. And, of course, all of these stocks have had a substantial move since the election surprise. But, good little bank. And I think 5 years from now, it'll be a lot higher than it is today.
All right, we're going to get a little bit out of your wheelhouse here and, talk about the XLF and the big banks here. They did have the big run-up from the election. I mean, they just, is Congress just going to put the stamp on, getting rid of Dodd-Frank and just make everything, easy for the banks here? And what do you make of, the interest rate environment here, a bump up by the Fed? I mean, how much does that really extrapolate to more profits for the banks, the big banks?
If they can pass it all, it's a big bump. I mean, if you do away with some of the more restrictive facets of Dodd-Frank, and that's not going to do anything, by the way, for the big banks. The big banks' regulatory picture is not going to change much at all. It's at the smaller community bank levels where this can really make a difference, community and regional banks, if they can do it. Same with tax reform. you reform corporate taxes and get a 15%, 20% top bracket for corporate income taxes. That's a 25, 30% bump in earnings for a lot of these banks. So it could be huge. Okay. Here's the problem. You just saw it with healthcare. Okay. Just because you want to do it as president doesn't mean that you're necessarily going to be able to do it. The legislative process, it's a lot like making sausage. You really don't want to watch it being done because it's kind of ugly. So tax reform, they're talking about August. If you've ever read the tax code, I think it's over 80,000 pages now, the tax code and related rulings on the tax code. You don't put together a plan in 3 or 4 months to overhaul that tax code. So if they bring a poor bill that's not been completely thought out and well done and try to rush it out in August, that's not going to pass either. So, it will all be good if it gets done. I'm really skeptical if it all gets done. And I will say that it's all baked into a lot of these bank stock prices. We saw huge moves in November and December. And I'll just throw it out there. I won't tell you exactly how I did it because that costs money. But in January, for the first time since 2007, we hedged the portfolio. We put on pretty much about a 3/4 hedge out till January.
Oh.
We didn't sell anything because that's not how we roll. We like all our banks. We think most of them are reasonably priced. We saw a lot of hot money, momentum, and call it macro-themed money pour in to very small banks that trade 4,000 or 5,000 shares a day in both November and December. And, those guys aren't going to hang around. As soon as these things stop going up, they're going to pile back out the door. I don't want to get hurt by that.
So you can I ask you what you use as a hedge? Because I don't think I've ever heard you use that term before.
I don't use it a lot. We used an option strategy.
Okay.
It's one I've used before. It hedges very well, but we're not rushing to sell bank stocks. We sold a couple out in the Seattle market because I think the real estate market out there is getting a little silly. And we're kind of looking at maybe cutting back on some of the small banks that have exposure to Boston and New York. But, I don't like to sell. So I'd rather just hedge.
Okay, how is your universe of stocks that you're looking at? I know at times it's, you've had a few in there in market downturns, but, other times it's got pretty thin. Just looking at the universe of stocks that you like to focus on, you're getting some slim pickings there.
Oh, yeah. I mean, there's very little that's trading, cheap based on asset value, cash flows, earnings. We had this nice rally. Earnings have not caught up. First quarter earnings, in my opinion, were just, or fourth quarter, I'm sorry, were just okay. There was nothing fabulous there. I don't see any real strong economic growth, which is, I think we'll get 2 or 3 more interest rate bumps this year. You did ask about interest rates. But then it's not going to do anything significant. We're not going to get a big move up in interest rates because the economic data just doesn't justify it. We'll be lucky to have 2 to 2.5% GDP growth this year.
All right, so if I was to twist your arm or your wife was to twist your arm and you said, I need to own a big bank, could you give me one that you feel even after this big rally still may be a little bit undervalued?
No, I'd call an orthopedic surgeon.
Okay. All right. And could you just give us a few issues on your radar or regions that you're looking at on your radar?
Well, 2 things that, I've told everybody that you need to buy these. You need to reinvest the dividend if you don't need the cash. And you just need to forget that you own them for, forever, basically. And they're real estate related issues. One's Brookfield Property Partners, BPY. That's run by Brookfield Asset Management's folks, and they own the skyline of major cities around the world. They own really high-end luxury shopping centers, malls. They own office buildings. They own hotels. It's a Class A property portfolio all over the world. They're in London. They're in New York, Washington. You name it. They own some skyline type properties there. It's trading at about 2/3 of management's estimate of asset value, yielding a little over 5%. And, management has flatly stated that, hey, we intend to keep raising this dividend by, 7-8% a year for the foreseeable future. We think we'll be able to do that. And they've also put in a buyback program based in Canada. Their parent is Brookfield, so they use they don't call it a buyback. They've got some other fancy name for it, but they buy they're buying back stock on a regular basis. I just think that you buy that, own it forever unless something dramatic changes at the management level. And Brookfield's been around since 1899, so I don't think that's going to happen. So I think you just buy it, own it, forget it. It'll pay for your kids' college someday. Same with Colony North Star. This was real complex three-way merger between Colony Capital and two North Star entities. But again, what you have here, you have hotels, you have single-family housing, you have multifamily housing, medical properties. You also have a huge real estate asset management business that produces a real steady stream of fees each and every month, things yielding about 8%. Trading, again, I think at about 2/3 of the actual asset value of the underlying properties. Tom Barrack is the chairman of that thing. He's made himself and several other people billionaires investing in real estate, and he did a pretty good job managing the inauguration for his buddy Donald Trump. Again, if you don't need the dividend, just reinvest it, continually buying new shares in good markets, bad markets, and unless they radically change the structure of the company at some point, don't ever sell it.
And you mentioned this Brookfield Property Partners, and we've also talked about Simon Property Group. And are there any banks out there that have more exposure to the real estate market? Because I look at some of these stocks like Tallman Centers and stuff. Big exposure. Now these big boxes, actually, that short might have worked out there, as that's come down since January. Are there any, you never know where the next crisis is going to be. You had the housing crisis that took down the banking sector and the markets. Is there anything, with the way these retailers are acting, is there any banks, big banks or small banks, with excessive exposure to the real estate market?
Well, banks are, by their very nature, excessively exposed to the real estate market. But in commercial real estate in particular, the regulators have expressed some concerns. If you have over 100% of your tangible equity exposed to commercial real estate loans, you're considered concentrated, and you're considered highly concentrated if you have over 300% of tangible equity capital invested in commercial real estate loans. And there's a bunch of banks that meet the heavily concentrated. Here's the thing. Regulators are watching it. They're on top of it. Commercial real estate, the pace of growth may slow a little bit here, but I don't think it's going to go down. The fundamentals of the market are actually pretty decent. The absorption rates are good, particularly in office properties, and in multifamily is, they're filling them up as fast as they can build them. I'm not aware of any banks that have excessive shopping center and mall exposure. It's something that we're aware of and careful of, but usually banks won't take all that on by themselves, a project that large. So a lot of that financing is coming from non-bank sources, and the banks that do have it have spread the risk around pretty good. We're not too concerned about commercial real estate at this point in the cycle. It may stop going up, particularly in some of the markets I've talked about, Seattle, San Francisco, Boston, New York, where you've really seen it go up. But I don't think it's going to go down. And from a lender's point of view, a banker's point of view, as long as it doesn't go down and the loan payments get made, I'm okay with that. So I don't think the risk's too excessive at this point in time.
We've been on the line with Tim Melvin of Banking on Profit, the go-to source for under-the-radar bank stocks. You can find all of his writings and research. Just go to bankingonprofit.com. Tim, thanks so much for hopping on today. We will talk to you again soon.
All right, thanks, guys.
All right, that is it for us today. Looking ahead to tomorrow's show, we've got a pair of guests for you on the radar. First, Mark Chaikin of Chaikin Analytics, and then Eyal Moore from Better Trader. So looking forward to those guests tomorrow. That's our show for the day. Hope you enjoyed it. Please remember that all of the information, material, and content is for informational purposes only and not meant to be investing advice. Have a good rest of your Wednesday. We'll be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need thinkorswim. To experience everything thinkorswim has to offer, open a TD Ameritrade account today. thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.